A warm welcome to all. I'm Ron DeLegge with ETF Guide TV. I've got some charts I want to share with you. Don't forget to subscribe if you're new to our channel and hit the like button if you've been enjoying our content. So let's get right to it, beginning with some sad news. We lost an investing great by the name of Jim Simons. This was one of his quotes that I think really stood out to me about success in investing. And it's not about being right necessarily all the time. You don't have to be right all the time. It's just about minimizing losses and maximizing gains. And boy, did we lose a giant. This particular gent, in the same league as better known folks like Warren Buffett and Charlie Munger. Jim Simons, if you're not familiar with his story, he was a mathematical prodigy, an absolute genius. He leveraged his skill with numbers into creating one of the world's most successful hedge funds by the name of Renaissance Technologies. And he passed away at the age 86 in his Manhattan home. He also, in his early career, worked with the National Security Agency. He was cracking codes for them. He spent some time in academia, but he really made his mark on the investment scene. His investment performance was absolutely insane. One of his funds, this is the Medallion Fund, averaged 39%. And look at that fee schedule. I've got highlighted in yellow the net performance, but his fee schedule was absolutely ridiculous, ridiculously high. And how do you beat ridiculous fees? Well, you do it with ridiculous performance. And he delivered big time. And it really just a curious way that he built this particular black box quant investing. He really spearheaded that whole movement. He was the king of quant investing. And we really don't know much about the intricacies of the underlying strategies themselves, but because he kept that top secret. But the performance was there, and he just, like I said, just was an absolute legend. His performance was basically, made a lot of people rich besides himself. I think his net worth at the time of his death, somewhere in the vicinity of about $30 billion. That's with a B. So pretty incredible success that he had. I also wrote about him in my book, Habits of the Investing Greats. I've got a link in the description section. You can check that out. Getting back to the community tab at ETF Guide TV, I asked you, the audience, this was one of our polls, for retirement, would you consider living in a country outside the United States? And I was actually surprised with these results. More than half of you, 61% to be exact, said absolutely yes. Yes, I would consider moving out of the United States. And we had answers all over the place. We had some that said, listen, I'm going to stay sheltered in place. I'm not going anywhere. Twitch Radio is part of the, I think it's Iraqi tribe. It's an Indian tribe. So he said, I'm staying put. But then others said that they know and have friends and relatives that have already moved to other places. Dave, one of our most active commenters, says he's got a brother that lives in Portugal. We had others that said that they're looking at living in places like their native Egypt, that's Ibrahim. Others said, listen, I like the Thailand or the Philippines. Sounds good to me. Have you seen the beaches from some of those places? They're unbelievably beautiful. Puerto Rico, Colombia. I haven't been to either place, but I like the climate. El Salvador and Costa Rica, those are pretty popular places. El Salvador's become a Bitcoin haven. And I think they've adopted that as their national currency. Some of you said Panama. Then we got Costa Rica and Belize again. Spain, Canada, Mexico, Australia. Sign me up. I'm with you. Dominican Republic. Love the bailando y la música de la Dominica Republic. So we've got a lot of really awesome answers. And so this just tells me that you're thinking ahead. You're thinking about, well, what is the next phase of my retirement? Where am I going to go? Where am I going to live? Maybe it's dividing your time. Maybe it's not necessarily being in one place all the time. Maybe it's living in the winter months in some of those warmer places. But it's curious to me, and there was a CNBC article all about this, about the number of wealthy folks that are getting second passports. Uh, these are wealthy folks that are based in the United States. So they're looking for flexibility. They're looking to go to other places. And I think that makes sense. My own personal story, just to give you kind of, and this was one of the reasons I asked you this question, was I have a younger brother who has been investigating our own family history. DeLegge is an Italian last name. It actually means of the law. That's the literal translation. Legge is law in Italian. And our great-grandfather was born in Italy. And he found out that if you can link a relative that was born in Italy to your lineage and show that paperwork and submit that paperwork with an application for citizenship, and you pay your fees and present your case, that you could become a citizen. We could become citizens of Italy and have that as a backup, a second passport. So that's sort of a process in my own situation that I've begun to investigate. And I don't know that I could necessarily live in Italy all the time, but let me tell you, I love the cappuccinos and I love the carbs, the pastas and the pizzas. And could I live there maybe, a month or a couple months at a time? Yeah, let's try it. I'm open to the idea. And the other thing, though, is it gives you flexibility. So I want you to, some of you, as you start to near retirement, as you start to plan for retirement, think about retirement, these are all things you should be considering. And also what kind of lifestyle that place is going to offer you. It's not just about exclusively money. So I'm glad that many of you that I polled here are thinking ahead. Now let's talk about some of the performance of some of the market indexes and the ETFs, tracking them. We've got the leader this year has been FBTC, which tracks Bitcoin. Now keep in mind, this is a year-to-date performance chart. It is through the market close of May 10th. We didn't get those spot Bitcoin ETFs till I think it was middle January. So this is not, technically speaking, a true year-to-date picture, but it's pretty close. And we can see that Bitcoin prices have come off their highs even after that halving event. But give it some time. I've got some things I want to share with you on Bitcoin in a second, so don't go away just yet. Some of the other major asset classes that have been performing well: commodities, ticker symbol SDCI. We just did an ETF battle with SDCI in it, going up against a couple of other commodity-linked ETFs. And let me tell you, there's been a lot of interest in commodities because they've been great performers here in 2024, and they've really done well since we had this cycle of higher inflation begin. That's when these commodities really begin to shine, and they have. We've seen specific assets like gold performing well within that commodities group. And S&P 500 has also done well this year. It's up almost 10% since the start of the year. And then some of those lagging areas, total U.S. bond market, BND, and then global real estate have been just about flat. Now, in terms of industry sectors within the S&P 500, we can slice it up like a pizza, a Chicago pizza, a New York pizza, whatever you like. And you can see these are the sector perspective review. We've got three areas that are leading: energy, XLE; communication services, XLC; and then utilities, XLU. And my goodness, what a run utilities have made here over the past couple of months. Now, this is an area that is sensitive to higher interest rates. And for a while, it was really kind of not really doing much. And all of a sudden, it jumped to life. I don't have any explanation for it, honestly. I'm sure there's someone else out there that wants to explain it, but it is what it is. And utilities pay a pretty good dividend yield, one of the highest yielding sectors in the S&P 500. And besides that, you're getting a pretty decent return. XLU ahead by almost 13.5%. So pretty nice run so far from utilities. Those two industry groups that have been laggards: consumer discretionary, XLY, and then XLRE, which tracks the real estate companies within the S&P 500. If we look at this from a big picture perspective, you've got 9 sectors up, 2 are down. The 2 that are down are down just modestly. So overall, pretty bullish performance for U.S. stocks if you're just looking at the S&P 500. This is a table that was shared by our friend Dave Krincis over at ETF Portfolio Management. Thank you, Dave, and hat tip to you for sending this to us. As a reminder, this is a longer picture, a longer view picture of what's going on with some of the top performing areas of the financial markets over the past 3 and 10 years. And look at who's on top. Bitcoin, GBTC, which recently converted to a spot Bitcoin ETF. I mean, the total return is just amazing. 70% annualized return. And of course, I remind all of our audience that that's history. We don't know what's going to happen in the future, so not at all predictive of what future results are going to be, but it is a point of reference and does help us to understand where the momentum is. And I'm going to show you in a second where the wealth is being created, where the Bloomberg Billionaire Index, which I always like to refer to, I'm going to show you who some of the top billionaires are, but also how they made their money, which I think is just as important as just don't focus just on the numbers, but how did they make their money? Because that's a good lesson for all of us, especially as we allocate money and look at deploying our investments, whether that be for retirement or other financial goals or things that we've got going on in life. Semiconductors have been great performers. I mean, NVIDIA obviously is the poster child of success in that sector. Taxable, which aims for triple daily bullish performance to the semiconductor stocks. That's been a great trade. And then TQQQ, which aims for the same triple daily leverage, but on the NASDAQ 100. That's bullish leverage. That's been a great performer. Teckle, I don't think we have Teckle in here. That's another one that's been a top performer, TECL. That one, I don't have the numbers on that one, but I know that one has been right in this range of dominant bullish performance. But again, this just gives you perspective on where the top areas are. And of course, my rule for leverage, if you're going to use it, make sure that it's in a market that's trending in the same direction, sharply trending in the same direction that you're trading in. You do not want to be using leverage in markets that are moving opposite to your trade or markets that are neutral. We also have a nice mention here of energy. Energy recently has perked up, and so thank you for including in energy, Dave Krincis. Now, in terms of our Bloomberg Billionaire Index, and this is where the wealth is being made, and you'll see I highlighted it for you to make it easy. Technology, 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 technology. Holy Toledo! 8 out of the top 10 billionaires made their fortune in technology. And so what does that tell us? What is the lesson for us from an investment perspective? That the technology industry sector, and that encompasses all kinds of stuff, semiconductors, software. You can even throw in the EV, electric vehicle movement, solar, all of these things, AI, artificial intelligence, cryptocurrencies. This is all part of a movement that is creating tremendous amounts of wealth. And you can see from our Bloomberg Billionaires Index, that's where the top money people, the big money, have made their fortunes. And so that's a good lesson for all of us, I think, from an investment perspective, where to be concentrating and focusing the attention as far as allocation of money and investments. Now, this is what CEO Jack Dorsey, former CEO of Twitter, he's still the CEO, I believe, of Block, and he said that Bitcoin is going to go beyond $1 million per coin by 2030. And I thought this was pretty interesting because, first of all, it's a pretty bold prediction. But the other thing is, and this is what I was thinking about, like, what would it take? What type of environment would Bitcoin need in order to hit that sort of level? So right now it's around $60,000 per coin. So what would it take to go from 60,000 to 1 million? And I'm going to share what I think is the answer in a second. But these are some of the ways that you can play Bitcoin beyond investing in its physical through a crypto brokerage account. You've got ETFs that are now covering this in the U.S. market, spot Bitcoin ETFs. And these are some of the ticker symbols of the top ones by assets under management and trading volume. Pretty soon we should start seeing some call and put options, hopefully, on spot Bitcoin ETFs. So I'll alert you when that comes to fruition. But getting back to what would it take to get to Bitcoin to $1 million per coin, take a look at this chart, folks, because this is pretty staggering. This is a chart from the Peterson Foundation showing the national debt here in the United States over time. You can see right here the actual line of where we're at right now, about $34 trillion. That's a very big number, but you can see that from this point forward, it's only going to get more and more bigger. It's like what you might say a snowball that's just snowballing out of control, and runaway spending continues at the federal level. This does not include, by the way, that $34 trillion does not include all of the liabilities tied to Medicare and to Social Security. So if you add all those numbers in addition to what national debt is, you've got liabilities for the U.S. government approaching $100 trillion. And it's out of control. There's not any way that they can pay for it. Economist, I think it was Larry Kotlov. I don't know how to say his last name. I'm bad with pronunciation, but he wrote he's got a brand new book about it, where he talks all about the problem, and he calls this runaway spending by today's political elites. He calls it child abuse, financially speaking. In other words, they're abusing the younger generation with all this runaway spending because they're going to get stuck with it. The bigger question for us, beyond just the investment thesis, because the investment thesis is, how do I hedge or protect against that? Well, an asset like gold or Bitcoin, which is detached from the U.S. dollar and U.S. currency and U.S. debt, this is the type of environment that an asset like that can excel in. And so that's the investment thesis. But what about the asset positioning thesis? Because this is a part of the conversation that I think most investors miss. And David M. Walker, the former comptroller of the U.S. government, an author of a book that highlights this problem called America 2040, he says that tax rates are the lowest they're ever going to be in our lifetime, and they're going to go up significantly and dramatically in the coming years. And 2026 is when the current U.S. income tax situation expires. After that, it's going to go dramatically higher or revert back to what it was pre-2017. But we do know that at some point that U.S. government's going to be forced to realize that they need to dramatically increase tax rates to pay for all this. And so from an asset positioning perspective, what does that mean? Well, there's only three places you can have your money, no matter how much you have. You've got taxable, tax deferred, or tax free. Think about this in terms of the taxable bucket, that's tax me now. Tax deferred is tax me later. And then the tax free is tax me never. So which of these buckets are going to be the most damaged, the most harmed by dramatically higher U.S. income tax rates? Well, clearly it's going to be the taxable and the tax deferred, because you're not insulating yourself from the coming tax rate hikes. Only the tax-free bucket, number 3, insulates you from higher tax rates ahead. Yet the irony is most of you watching this, most investors and most of the portfolios that I've analyzed and graded have most of their assets and net worth tied up in the taxable and tax-deferred bucket. So you're a sitting duck. The way to get around that is by shifting money into the tax-free zone each and every year. While U.S. tax rates are still at their artificially low levels, you can do that through contributions to things like Roth 401k or Roth IRA, or conversions, Roth conversions. So these are things that you should be doing. This is a quick summary of some key thresholds for those of you that want to make contributions to things like Roth IRA. If you're over age 50, you can do $8,000 for 2024 contributions. If you're under age 50, you can do $7,000. These numbers, by the way, keep going up. So the government is being generous in that regard. But you can also do even more in things like Roth 401k. So if you've got a traditional 401k at your job, you check with your employer to see if you can start making Roth 401k contributions, because the limits are a lot more generous in terms of what you can contribute. One final thing before we end today's episode, you can download a copy of a new ebook that we just published at ETF Guide, 60 Smart Ways to Retire Better. Covers all these different areas, from estate planning to distribution pitfalls to healthcare and Social Security. So check that out in the description section below. And it's free. It's free to all of you in our audience. Well, thank you so much for tuning in today, and hit us up in the comment section below. Let me know, which countries are you retiring to or looking to retire to? Is there anything that we said in today's episode that rung a bell with you? How about Jim Simons? Wow, what a legend. And there's so much to be learned from guys like that. A true mathematical genius. And then what about performance? Is your portfolio keeping up with some of the performance of the major indexes and benchmarks? I'd say if it's not, if you're lagging dramatically major ETFs like SPY, for example, or total U.S. stock market ETF, then I would say that one of the reasons is probably because you're over allocated in the wrong things, number one. But number two, maybe you don't own enough of those indexes in your portfolio. And maybe the solution is to join the winning team. Those indexes are super hard to beat, by the way. So why fight the trend? Join the winning trend as opposed to trying to beat it. Well, I'm Ron DeLegge with ETF Guide TV. Thanks again for watching, and we'll catch you on the next episode.